Hi there members, it's Mike Bell here from the Armchair Trading Floor. It is Sunday the 25th of March. We're coming to the close of the first quarter of 2018, so hopefully we can finish off this last week quite strong. We've obviously got the bank holiday coming up, and we've got obviously Good Friday as well, so we should see some low volumes being traded from the middle towards the back end of this week, just because of the bank holiday. But let's obviously have a look at what this week has in store for us. In terms of new pairs, what we're going to be looking at is we're going to be revisiting a lot of the old pairs from last week. And we're going to talk about what sort of went right, what went wrong, and what we're going to do to have a plan B just in case it doesn't go exactly how we want it to. So if we take a look at the Great British Pound GBP CAD, obviously from last week's setup, we said that we were going to be wanting entries. There wasn't a signal sent here because this spiked up quite rapid. So what we wanted actually stayed within actually a pip of our theorized stop loss as well. So if I just zoom this in, so there we were literally one pip in from the stop loss. So this has actually turned how we wanted it to turn. But what we should be looking for is we'll be waiting to actually take entries at that original level of 183.064. We'll be looking to take a short, and then just to follow our original plan, which is for price to pull back. Hopefully we can break below this MA, this moving average right here, and then just keep below that to get ourselves to this 20 EMA, expect some consolidation, and then target this long-term trend line before continuing higher. If I zoom out of GBP CAD, what you'll see is that we've been on a quite strong uptrend over the last probably about last year and a bit now, about 18 months. The pound's been on a strong uptrend, obviously after all the Brexit scenarios. But what we will be looking for is we're targeting this trend line as our expected target. So we're still confident at the 1.7606 level before continuing higher to make new highs and take us back into that almighty 190 region, 1.90. So GBP CAD, I'm actually going to be looking at diversifying my entries this week, and I'm going to be putting on smaller positions, but I'm actually going to be having a lot more positions, and we're going to be following this week's watch list. So last week when we obviously had a look, there was a lesson learned in just focusing on USD JPY. Again, we all fall trap of doing this sometimes. When things go exactly how you want it to go, you can get sort of attached to a position, but it is best to just obviously diversify. So we'll take last week's loss as a little bit of a lesson, because all of the other pairs actually did exactly what they needed to do, but it was just a timing. So for us, it's just going to be a case of let's see how this week starts off. We'll lock in a few entries, and hopefully the pound can just sink as we close up to the Q1 finish for 2018. So just so we've got this very clear right now, we're going to be looking at taking shorts on GBP CAD at 1.83036. So there we go. So I'll just pinpoint exactly where we want him to be entering. 1.83064. That should be good enough for a short without stop loss. We're actually going to put this just above last week's high, which is 1.84. So solid 117 pips there, and hopefully we'll just lock this pair in and then just let the price ride itself all the way down to our expected target region of this trend line as well. If we go into GBP USD again, last week's watch list, we literally got blown out on the market open, and prices spiked all the way up. We kept at this region which was the 1.39, but instead of breaking below with the MAs, we actually just spiked completely up and went on a massive bull run. So the GBP caught about 200 pips, yeah, 200 pips across the week. They gained 200 pips, but what we've got here is a nice reversal signal. I'm just going to highlight this on the chart. So hopefully the turn just before the market closed is going to be a good sign that we can start to print some lower lows and lower highs here as we pull price back again to this long-term bullish trend line that I'm waving right here. We're still going to be looking at, again, same as last week's plan. What we need to do is just get below these moving averages, get the moving averages to act as a level of resistance, and then we'll just be taking short entries every time we approach an expected trend line resistance. So if this week goes how we think it's going to go in the short term, what I'm hoping for is a nice strong pullback towards the start of the week, and then we can start to see some solid potentials for short entries just like this, and then we'll literally just catch an entry at the resistance level of this expected bearish trend line that should come down like there. As you're all fully aware, the GBP pairs tend to move quite fast. Pip range on a typical candle, you can see here, we typically covering like 30-40 pips within the hour on GBP USD, and it can be extremely choppy. So you can see very much up down, up down, up down. Things can swing around in an instant. We literally caught 200 pips up and then climbed 200 pips back down at the start of February, and that move is just an average movement. You can see it here, massive swings of up down movement. So all we need to do is just catch GBP USD on a solid push up, because that tumble will eventually come. So what we're going to be looking for GBP USD, there's not going to be any pending orders set for this. It's only going to be market executions only. But what I'm hoping for towards the start of the week is to see a nice print of a lower high right there. I do expect us to come back up to the high of the 23rd, but if we spike above it, as long as we keep anywhere within this region, anywhere between 1.41 to 1.4220, so anywhere within this solid 40 pip region, that's where we really want to be taking our short entries for GBP USD. So I'm just going to reframe that and move this back up. Our zone for entries for GBP USD is going to be anywhere for a short within this box right there. So this 40 pip space, that's what we'll be looking for, and all we just need to see is a nice reversal pattern. We're still overly bullish right now for this pair, so I do expect a pullback towards the the start or middle of Monday, a nice push up, and then that's what we're hoping for to execute our short entries. If I look here on the fib, if I get my fib up, let's just see. Not really seeing much here on the fib, but we are going to be looking for 1.40 and 1.3980. This still makes a bit of sense to me. The A, B, I do expect to get something over here at this expected trend line right there, and hopefully what we should see is just a nice solid push to the downside. USD CAD, USD CAD pretty much did exactly what we said from last week's watch list. We're about 3 pips short from a perfect entry actually from last week's watch list. So again, very much the same. We expected price to obviously go and respect this trend line and pull back towards this trend line. Price actually fell a little bit further for me, but to be fair, it made sense that the traders out there were actually targeting this moving average, so this 200 EMA. So we respected that level of the 200 EMA of support. So what we should still see is a nice push to the upside for USD CAD as well. I'm just going to leave this chart exactly the same. It's the same move as last week. We should see a nice swing back to the upside for this pair as we bounce off this region between our 1.2750 key level and this support region right here, 1.2830. So we should be taking longs on USD CAD anytime price gets into this level of support. Again, this is a major key level, and we should see some bullish activity to take us up to this 13286 key level. So I do think that we're going to eventually break through 1.31 and stay above it for a short period before following the plan on the watch list and then plummeting a little bit further as well. But this is definitely one to watch. Longs on USD CAD. For the short term, again, it's very worthwhile taking a small position on this pair. Again, entries around 1.27. Yeah, 1.2789. It would be definitely worthwhile taking along around that level, and then we're literally going to just be targeting at least two last week's high. So it's a good solid 300 pips right there for USD CAD, and then we should hopefully get nice reversal signs to catch a C leg of our Fibonacci tool. Again, if I just zoom this out, I think we're actually on the daily chart here. On the daily chart, yeah, our long-term target. I've been watching this one again, as mentioned, for God, I must have been watching this pair for about 12, 13 months now, and we expected this push up for USD CAD up to this level, and it's actually done exactly what we expected it to do. So, in terms of the long-term move, we are at a very crucial point because we are at this trend line resistance where we're again printing lower lows and lower highs. So we should expect this move right now to be the lower high, and we can catch this one right at the top and take this pair right to the ground. Similarly to what's actually happened here on USD JPY. If I zoom out on USD JPY just so you can actually see, again, for USD CAD, where we are is if we were going to replicate the same position where we are with the USD CAD, we're actually approaching this region right here. So on a long-term basis, if you zoom out, you can see we had that high, lower lows, lower highs being printed, and then what we've got is that final push down. So for us, I'm very optimistic for USD CAD that we can see. This is on a daily time frame rather than a 4-hour, that we can get this nice push all the way down and sink us into the ground with 1.16. Very positive and optimistic place to be taking short entries on USD CAD. But as we switch to our next pair, what we will be looking at is USD JPY. So USD JPY, last week was a failure on this one. Because the week started off so good, with our lines being respected, and again the week before we had an excellent week on USD JPY when we called the trade. Literally, you can see here our lines were respected to the T until we hit this major level of resistance at the 106.60. And we actually mentioned that in that small video for the trading for the support and resistance levels, that if we fail to break that, we would be seeing price crash to the ground. So our bias isn't always bullish, but what we should see for USD JPY is we're going further down. We free fell all of Thursday and a little bit of Friday, to be fair. Literally, there's a good solid, probably about 16 hours where we were just on a straight downfall for USD JPY. But what I'm going to be looking for is, again, the rules of support resistance. If you break support, it now turns to resistance. So this level, this zone, this 105.50 zone is going to be our new level of resistance. So this is our new top. So what we're going to be looking for is price to pull back up to that level of resistance. I do expect a manipulative spike a little bit further, probably 30-40 pips higher. So that's where we're hoping to take our entries, around this region, around the 105.75 region, before plummeting to the next level of support, which actually sits at 103.50. So again, a good solid 200 pips potential for this pair. And if we do break this 103.50 level, we are going to be falling all the way down to 101. But let's just see how time goes in the short term as well for this particular pair. Again, there's a lot of fundamental stuff you can see here. Talks of trade wars with China. So again, anytime Trump gets mentioned, we should just see some crazy price action as well for USD, the USD pairs. But again, we've been preaching this for a long time, USD weakness. Yeah, that's pretty much it for USD JPY. Pretty solid. It is worth doing a pending order, just in case you miss it. So again, 105.75, sell order with a 45 pip stop loss, so stop loss at 106.20, and then your take profit's just going to be set at 103.50. If I zoom this out on the daily time frame, I'll just explain the reason of why we've actually targeted 103.50. If I just take this zone across, I'll look left, what we will see is this is the level that we actually were at before USD JPY took a crazy bull run, literally going at about 1400 pips higher. And there we go. So we literally fill in this wick right here. The rule of thumb again, wicks will be filled. So we're filling this space right here, and we do expect to see 101 now that we've actually breached that original level of 105.50, which was our previous level of support. So I do expect to see 103.50 and then obviously shoot down to 101 just to fill this space, and then we should see a massive move to the upside. Again, just catching this from the top to bottom of USD JPY. Again, this was the lowest point of last year, of 2016 as well. Obviously we haven't seen price fall that low for a good previous 12 months. So yeah, 2015 and beyond. So we're at a crucial level now for USD JPY, but if I go in and look on the daily time frame, this looks heavily bearish. All the moving averages are actually above and pointing to the downside on USD JPY. I'll just zoom that in. Hopefully we can just catch us on a nice pullback to the upside, and then just take this pair to the ground. And our final pair is going to be USD Swiss franc. Now I put this in the new group that we've actually got. What I wanted to do and share with everybody in this new chat in the member zone is actually going to be what we expect to see from you guys when you're obviously sharing your ideas. Again, it's all a learning curve for some of you traders. I know that some of you might not have the experience, but I really want to make sure that the quality of what we put out and the feedback and response that everybody gets is top notch, so then we can all understand the language and speak in a technical way, so then we can really grasp what you're actually expecting, and it'll allow you to elaborate and understand by speaking in a technical form. So what I do want to see, and what I do hope that we can get to see from you guys, is when you submit your trading views, that you literally just use this tool on the drawing tool, which is the call outs. So you can literally click on call outs, pinpoint what you're trying to highlight, and then you literally just type whatever it is. So you can type your point of interest and obviously just highlight it like that, so then it makes it easy for the other members in the group to just see exactly what you're trying to explain, and so then you can get your bias across, and then hopefully get some positive criticism and some another opinion on your particular analysis as well. Again, the reason why we're doing this is based upon your own feedback, and you guys thought that would benefit the group, and to be fair, so do we as well. And also what it allows us to do is it allows us to see if you understand the way how we explain the charts, so then you can replicate that in that same way to make you more consistent. And the final reason is to simply just share more ideas, more opportunities, more success, more money as well for the entire group. So I think we went through all of the particular pairs that we've got on our watch list for this week. Cryptos. Looking at the cryptocurrency again, what we've got is we're looking at Bitcoin, and what I've got here on Bitcoin is I've got a double top formation right there. We've actually highlighted this particular range. Now we've got a major level of resistance that we've called at the 11,500 level, and obviously we've got the quite obvious 6,000 region as well, where price has just spiked all the way back up from major support to major resistance. So we've got a solid 6,000 pip zone right here for Bitcoin. Now what I do expect looking at this structure is we've got this neckline off the double top. What we should see from that support region around that 8,500 is if we break below 8,500, and this actually looks like a retest right here, is we should fall and fill this gap right here. If we zoom this out from the 4-hour time frame to a daily, this actually looks like another wick, and again the rule of thumb for wicks is your wick ranges will be filled, so I do expect price to actually come down further south. Again, looks like we're going to get another moving average crossover right here, with this moving average going to the upside. That should send price down to around 6,000. So we're going to be looking at a potential for a nice short entry on Bitcoin USD for the short term, and we do expect, again, on a long-term basis, we are extremely bullish on these cryptocurrencies. The prices should rise rapid, and when they go, you know that they actually do go very fast. So in terms of what to look for Bitcoin, as long as we stay under 8,800, the sell is definitely on. You can have a stop loss at maybe 9,200, and your take profit's going to be back down to the 6,000 region. So this can be a nice juicy trade for us. It looks like price is just rolling over right there. Hopefully we can catch a nice short on Bitcoin all the way down to 6,000 and catch some extra pips as well. As I take you into the Ecofin app, again, it looks like we've had our first member post something in this group chat, so feel free to just post in the group chat, share your analysis. Really good analysis here. Again, he's highlighted the trend line resistance and the trend line support right there, and just said his view on where we should be looking as well. And we've obviously done ours on there Our content's actually only going to be posted in the full members zone and in the unlock signals page. This particular zone is just for the members. We'll comment and put some thoughts on your particular analysis in there, but the key signals and the key alerts that you'll be looking to take is going to be through here. As I round off this weekly watch list for the final week in March, what I wanted to say is, again, looking at last week, it's definitely a lesson learned. So what we should be looking for now is highlighting our entry points on these different pairs that we've obviously highlighted on the watch list, and diversifying our investments. So the importance of diversifying your investment is to restrict you from getting emotionally attached to a particular position. I know that it's very difficult to do that, not to do that sometimes, because things might work out exactly how it looks like it's working out, and then at the drop of the hat, you've invested and it just doesn't go your way. So we're all quite classy, and I'm very proud of obviously some of the members in this group who just took it on the chin. We've seen better weeks than last week, but we'll just scrub off, come back with a fresh start, fresh mindset, clear our minds, clean the charts, and then just go in and have a strong finish to the first quarter of 2008. Thank you very much for your time. Have a great evening and good luck on your trading week.